Are you ready to seize the moment and position yourself for financial growth as we approach 2025? The market landscape is shifting, creating massive opportunities for those who know where to look. Peter Lynch once said, "Know what you own, and know why you own it." By understanding the right strategies and choosing the right ETFs, you can harness this knowledge to build long-term wealth and minimize risk. Imagine turning $100,000 into millions with just 3 strategic investments. These ETFs are not just investments. They're the gateway to financial freedom. These funds offer a mix of growth potential, sector diversification, and dividend income, making them essential for anyone looking to build a balanced portfolio. Whether you're interested in capturing tech growth, tapping into industrial strength, or securing consistent dividends, these ETFs have you covered. Harry, let me tell you what's happening in the markets right now. It's nothing short of exciting. The Dow Jones Industrial Average is up 3.2% this week, and the S&P 500 continues its climb with a 3.6% gain. Meanwhile, healthcare and industrials are stealing the spotlight. Johnson & Johnson surged by 4.8%, and Boeing added an impressive 6.1% after strong quarterly guidance. In tech, we're seeing a resurgence with Tesla up 5.5% and Adobe rising 4.7%. But here's the big surprise. The consumer discretionary sector is on fire, with Target posting a 6.2% jump following a major earnings beat. And let's not overlook small-cap stocks. The Russell 2000 has gained 5.6% over the past 2 weeks, signaling a broader market rally. These trends highlight one thing. The markets are moving fast, and now is the time to act. As Peter Lynch also said, the best stock to buy is the one you already own. It's all about knowing when to double down on winners, and today, I'm going to show you how to do just that. If you invested $100,000 today in one of these ETFs, with its historical average growth rate, your investment could grow to an astonishing $3 million over 30 years, generating annual dividends of $30,000. Now, let's dive in and set you up for success. Schwab, U.S. Large Cap Growth ETFs SCHG. The Schwab U.S. Large Cap Growth ETFs SCHG offers investors exposure to prominent U.S. large cap growth companies. SCHG's share price is $28.47. The ETF's top 10 holdings constitute approximately 60.48% of its total assets, with significant allocations to technology and consumer discretionary sectors. The leading holdings include Apple Incorporated, 12.23%, NVIDIA Corporation, 11.98%, Microsoft Corporation, 11.23%, Amazon.com, Inc., 6.29%, Meta Platforms, Inc., 4.52%, Alphabet Inc., Class A, 3.57%, Alphabet Inc., Class C, 2.95%, Broadcom Inc., 2.88%, Tesla Inc., 2.50%, and Eli Lilly and Company, 2.34%. Year to date, SCHG has delivered a return of 34.42%, outperforming its category average of 21.35%. Over the past year, it has achieved a return of 40.31%, closely aligning with the category average of 41.44%. The 3-year annualized return is 11.74%, surpassing the category's 4.80%. SCHG distributes dividends quarterly, with a current yield of 0.43%. Assuming a consistent annual return of 11.74%, a $100,000 investment in SCHG would grow to approximately $303,000 after 10 years, $918,000 after 20 years, and $2,780,000 after 30 years. These projections are based on historical performance and do not guarantee future results. Regarding dividend income, with the current dividend yield of 0.43%, a $100,000 investment would generate approximately $430 in annual dividends initially. Assuming the dividend yield remains constant and the investment grows as projected, the annual dividend income could increase to about $1,303 after 10 years, $3,947 after 20 years, and $11,954 after 20 years, 30 years. These figures are hypothetical and depend on the sustainability of the dividend yield and the fund's performance. SCHG's portfolio includes large-cap growth companies, providing investors with exposure to sectors poised for expansion. Its performance and dividend distributions reflect the underlying company's growth and profitability. As with any investment, it's essential to consider the inherent risks and conduct thorough research or consult with a financial advisor before making investment decisions. Are you more interested in high growth or stable dividends? Stay tuned, because we'll dive into how each ETF matches these goals. Invesco NASDAQ 100 ETF QQQM. The Invesco NASDAQ 100 ETF QQQM offers investors exposure to 100 of the largest non-financial companies listed on the NASDAQ stock market, focusing primarily on the technology sector. QQQM's share price is $209.80. The ETF's top 10 holdings constitute approximately 50.99% of its total assets, with significant allocations to technology and consumer discretionary sectors. The leading holdings include Apple Incorporated, 8.82%, Nvidia Corporation, 8.37%, Microsoft Corporation, 7.76%, Broadcom Inc., 5.22%, Meta Platforms, Inc., 5.07%, Amazon.com, Inc., 5.03%, Tesla, Inc., 3.1%, Alphabet Inc., Class A, 2.58%, Costco Wholesale Corporation, 2.57%, and Alphabet Inc. Actions, Class C, 2.48%. Year-to-date, QQQM has delivered a return of 25.11%, outperforming its category average of 21.35%. Over the past year, it has achieved a return of 32.13%, compared to the category average of 41.44%. The 3-year annualized return is 9.79%, surpassing the category's 4.80%. QQQM distributes dividends quarterly, with a current yield of 0.68%. Assuming a consistent annual return of 9.79%, a $100,000 investment in QQQM would grow to approximately $255,000 after 10 years, $650,000 after 20 years, and $1,660,000 after 30 years. These projections are based on historical performance and do not guarantee future results. Regarding dividend income, with the current dividend yield of 0.68%, a $100,000 investment would generate approximately $680 in annual dividends initially. Assuming the dividend yield remains constant and the investment grows as projected, the annual dividend income could increase to about $1,734 after 10 years, $4,420 after 20 years, and $11,288 after 20 years, 30 years. These figures are hypothetical and depend on the sustainability of the dividend yield and the fund's performance. QQQM's portfolio includes large-cap growth companies, providing investors with exposure to sectors poised for expansion. Its performance and dividend distributions reflect the underlying company's growth and profitability. As with any investment, it's essential to consider the inherent risks and conduct thorough research or consult with a financial advisor before making investment decisions. Vanguard Dividend Appreciation ETF, VIG. The Vanguard Dividend Appreciation ETF, VIG, is designed to track the performance of the S&P US Dividend Growers Index, which includes companies with a history of increasing dividends over time. VIG's share price is $203.48. VIG's top 10 holdings constitute approximately 30.60% of its total assets, with significant allocations to technology and financial sectors. The leading holdings include Apple Incorporated, 4.75%, Broadcom Inc., 4.25%, Microsoft Corporation, 3.63%, J.P. Morgan Chase and Company, 3.40%, ExxonMobil Corporation, 2.82%, United Health Group Inc., 2.81%, Visa Inc., Class A, 2.50%, MasterCard Inc., 2.23%, Home Depot Inc., 2.11%, and Procter & Gamble Company, 2.10%. Year-to-date, VIG has delivered a return of 21.73%. Over the past year, it has achieved a return of 21.30%. The 3-year annualized return is 9.79%. VIG distributes dividends quarterly, with a current yield of 1.67%. The payout ratio stands at 48.13%, indicating a balanced approach between dividend payments and retained earnings. The dividend growth rate over the past year is 8.13%, reflecting the fund's focus on companies with a history of increasing dividends. Assuming a consistent annual return of 9.79%, a $100,000 investment in VIG would grow to approximately $255,000 after 10 years, $650,000 after 20 years, and $1,660,000 after 30 years. These projections are based on historical performance and do not guarantee future results. Regarding dividend income, with the current dividend yield of 1.67%, a $100,000 investment would generate approximately $1,670 in annual dividends initially. Assuming the dividend yield remains constant and the investment grows as projected, the annual dividend income could increase to about $4,259 after 10 years, $10,855 after 20 years, and $27,622 after 28 years, 30 years. These figures are hypothetical and depend on the sustainability of the dividend yield and the fund's performance. VIG's portfolio includes large-cap companies with a history of dividend growth, providing investors with exposure to sectors poised for expansion. Its performance and dividend distributions reflect the underlying company's growth and profitability. As with any investment, it's essential to consider the inherent risks and conduct thorough research or consult with a financial advisor before making investment decisions. Before we wrap up, let me leave you with this. Success in investing isn't about timing the market, it's about time in the market. Whether it's the steady growth of VIG, the dynamic potential of SCHG, or the tech-heavy innovation of QQQM, each of these ETFs offers unique opportunities to grow your wealth, generate income, and secure your financial future. The key is to start now. Every day you wait is a missed opportunity to let your money work for you. As we've seen today, even a $100,000 investment can turn into millions over the years with the right strategy and patience. So, which ETF resonates with your goals? Let me know in the comments below, and if you found this video helpful, give it a thumbs up and subscribe for more actionable insights to grow your portfolio. Remember, investing is a journey, and every step you take today gets you closer to financial freedom tomorrow. Thanks for watching, and I'll see you in the next video.